And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. The ETF world in 2021 was dominated by three topics: crypto and the hope for a Bitcoin ETF, ESG, and thematic tech as Cathie Wood rose to superstardom. Inflows hit historic records, likely close to $1 trillion when it's all tallied up, with total assets under management now approaching $8 trillion. What will excite ETF investors in 2022? Let's talk to a man I call the master of thematic tech investing, Jay Jacobs, Senior VP at Global X. Jay, I look at ETFs with the biggest inflows in 2021. I see your name all over them, Global X. Your infrastructure ETF, your lithium and battery ETF, your uranium ETF, your cybersecurity ETF, all among the biggest inflows of the year, $800 million to $3.5 billion. I know it's early, but what areas are exciting investors going into 2022?
Well, Bob, what we like to look for in thematic investing is inflection points, where several converging themes come together to make the overall adoption of a very powerful theme accelerate. Where we see that happening right now is in robotics and artificial intelligence. You have low interest rates, you have rising labor costs, you have disrupted supply chains. We think we're going to be in the golden era of robotics adoption in the United States and beyond. We're actually forecasting growth of industrial robots from 16 billion to 37 billion over the next 10 years, with 2022 being that key inflection point.
We're going to talk about robo at ETF Edge in a few moments. And yet, when I look at the numbers, most of this $1 trillion in inflows went into plain vanilla index ETFs. The S&P 500, huge inflows. NASDAQ 100, huge inflows. Russell 2000, big inflows. Less than 5% actually went to the crypto, the ESG, the thematic tech, what we were all talking about, those big three topics. Is it good news or bad news, Jay, that the average investor seems intent on buying the broad market rather than picking a lot of individual thematic winners or losers?
I think inflows are really helpful in showing how people are building portfolios today, not the portfolios of yesterday. And if you look at the breakdown, actually about 7.5% of inflows into U.S. equities went into thematic funds, which are basically, in a lot of cases, U.S. equities. So it's showing that people are changing their portfolio construction. They're still using those low-cost, passive, core pieces of their portfolio, but they're supplementing it with thematic, ESG, sustainable funds in the satellite positions as well.